Welcome to TradeTheMBI.com. This is John. This report is for the 19th. Well, yesterday went pretty much as expected, continuing to break supports. No surprise there. We had MBI White leading. Not a whole lot of effort from buyers to do anything, and this dip below the red line is just an indication that you're in continued weakness as we get closer and closer to what the expected fill of positive extreme. Gee, what a surprise. No, it's not. Pretty straightforward. From an NQ standpoint, getting much closer to that original marker right there, which filled that one back in. So the NQ has already completed its move. This one wasn't a positive extreme, so it doesn't have to. But we can see from the S&P standpoint, we're not quite there. So you can see the NASDAQ has faded proportionally greater to that algorithm move than the S&P has. So just a little bit more weakness from tech, but then again, it had a little bit more of an outside move. Treasuries, of course, hovering at the higher end of the yield, uncertain of where to go from here, simply because more money keeps flowing into it now. Because they can see the cascade in the market at this particular stage, and they're not ready to jump back into that yet, particularly with the unknowns. You still have the Israel question hanging over there, Iran, that geopolitical aspect of it, certainly a hamper. Oil had shot up quite a bit, faded back somewhat, but still, again, presents increasing pressure. The longer it stays at these elevated areas is just going to be a problem. The euro pulled back from the giant peak of the falling dollar situation, but again, they're doing what they can to hold this here. They've got to, because if they don't, the pressure from the euro standpoint really gets to be ugly, and they can't afford that at this particular stage of the game, because it's already in pressure. And deciding to throw extra tens of billions of dollars at Ukraine for that situation is something that seems inevitable. It's a very strange situation. There really is no value to it. But when you think about the amount of money they're spending, and you sit there and you look at the situation in the U.S. with problems here and there that need resolution, and they're getting zero attention, all to fund war in Eastern Europe. Go figure. But it is what it is. And gold is going to continue to skyrocket from this. Pushed up towards the highs, finished midway down in between, but that's okay. Bitcoin also saw a resurgence after retesting its 50% move. And you can see there from the positive extremes, still had more to go to fill it. But interestingly enough, it's the ETH that had gone further into that positive extreme realm, having filled it all. So it's kind of like the situation where ETH represents sort of the NASDAQ versus Bitcoin matching the S&P. It's kind of an interesting parallel, seeing those behaving. And of course, the halving coming up, potentially as early as today or that. And so that will certainly make a huge reduction in things as far as that goes. So we'll see how that plays out. But it was great watching it from an intraday 50K. We were watching the bounce. It was a clean buy situation. And then as we got to the 50% white MBI peak, and it was like, that's the death nail. We ended up with the DOC right at the same point, and I was saying on the Skype chat that we would be going back to the zero, and that's exactly what we did. And you can see MBI White has stayed in the lead, a brief moment where it tried to do something more, but the white spiked again, and that's where you've seen the massive decay here in post-market. And they're building it back up. Intraday, this is what that looked like. That moved to the 50%, and then it just cascaded lower the rest of the day. And there's just no real incentive at this particular stage from the buy side. I wouldn't call it a super active short situation, but from an intraday standpoint, you can see the shorts have been much more active, and it's a real situation. It doesn't mean that we're not going to get buyback situations, because when you look at that daily, as you hit the supports, we're starting to see the beginning of the magenta, the de facto cross, but that shakeout showing with the histogram below yellow, it's a continuation of negative momentum is the best way to describe it. And so I think we're pretty much on par with all the expectations that we've had so far. Nothing's out of the ordinary, and it's all fairly orderly at this particular point. We haven't really reached any kind of panic cascade yet. So all in all, continue to play with the readings as they come, and I think it provides opportunities both long and short. But the bias is definitely to the downside when things start to cascade. It's going to continue. These people who think that all of a sudden, just because the market's dipped a certain, it's going to bounce. No, don't assume that. Go with what the readings are. As always, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.